Grant Cardone is everywhere. He is a marketing machine. And one of his most recent messages is 2023 is going to be an amazing time to buy real estate. This is a very interesting discussion because the talking heads in media are basically saying, don't do it, don't do it, don't do it. So I thought I'd bring on my good friend, Jonathan Twomley, talk about the multifamily space and see if he agrees that 2023 is going to be an amazing opportunity. Hey, Jonathan.
Hey, how are you, Michael? And yes, I do. I agree
Yeah,
that.
video over.
Yeah, that's it. All right, see you guys. Come to my conference.
That's hilarious.
Yeah, no. So listen, um, I Grant Cardone, according to what you told me earlier before we started, is really hyping it. I don't know. I mean, because he's a great marketer, right? So he tends to hype, and hype works, right? So,
Yeah.
but I don't know if I would say it's the greatest opportunity ever. I mean, the greatest opportunity was 2008, and I don't think we're going to be seeing 2008 style bargains. That being
Yeah.
said, I think this is going to be the best year in since 2008 to be buying apartments,
Yeah.
or really any kind of real estate, because we're finally in a correction situation. The market has changed. Market changes scare people, and when people are
Yes.
scared, they back off, and that leaves more opportunity for everybody else. It means that there's less competition, prices go down, and for people who are ready to buy, who are willing to ignore what the media is telling them, and ignore all the people who bought at the top and are now losing money and talking about how bad real estate is and they'll never do that again.
Mm.
People with a little bit of intestinal fortitude, as we used to say as a lawyer, are going to have some really great opportunities ahead. So
Yeah.
I've been telling people this for some time, but now is really the time to be getting ready in a number of ways. So, like, if you have cash, right? If you have dry powder, get it in, get it out of whatever it's locked up in, so that you're liquid and you can start taking advantage of opportunities that come your way. If you were looking to get into this business, like to buy your first property on your own, for instance, now is the time to, yesterday is the day to really start learning how this business works, because the window will not last that long, right? For the
Yeah.
best deals, right? There'll be maybe a 6 to 12 month window when you've really got opportunity ahead of you, and you need to be set up for that. But I really do think that it's going to be a good time. And I don't know, is now a good time to show that chart I was talking about, Michael, or do you have other stuff you
Yeah,
want to talk
I
about
just
before?
want to I want to hit one couple of other things. When
Yeah.
I look at what's ahead of us, I actually think it's the next 2 years. And actually, I have a question for you because I don't understand the timing of pain in multifamily. So we'll talk about that next. But you're absolutely right. I think there's two kinds of areas that make this next 2 years amazing in multifamily. One is all the new investors that are going to hear about all the pains and losses, or maybe they suffered some losses. They're not going to come back, so less competition for new deals. But there's also this building stress or pain in deals that were financed incorrectly with stupid assumptions. At some point, those
Yes.
are going to break, and either the operator or the bank is going to say, we need it, we need to disposition this asset. And if you're there with cash, you can get it. So I think it's both those.
Yeah, I mean, those two things will work in tandem for sure. They kind
Yeah.
of they kind of reinforce each other, because as soon as you start having some of these distressed assets, hitting the
Yeah.
market, and people hear about it, then they get scared. And frankly, it works on the banks too. The banks will start to get scared. I even heard, somebody was telling me, I can't remember who this was. Somebody mentioned to me yesterday that some community banks right now are so skittish that when they won't lend you money unless you have the same amount of money liquid
Oh, wow.
right now. Right. So if you want a $5 million loan from the bank, you've got to have $5 million liquid in
Wow.
your, in order for them to lend you that money, which is insane. I mean,
Oh, that's
that's,
that's a next level
yeah,
fear.
that's, and I know, like, the community banks, they're doing these, they're not selling these loans off. This is on their balance sheet, right? So they're more risk averse, but still, that's like seriously risk averse when they're requiring a
Yeah.
one
Oh,
to one
yeah, I
one
think
to
I
one
told
liquidity.
you it must have been 4 months ago now one of the community banks that has one of my apartment loans sat me down after doing our financial statement and showed me a folder and basically said, Michael, we're not going to fund 50% of these. We're not going to renew 50% of
Yeah.
these.
Yeah. I mean,
Right. They are nervous.
yeah, I mean, I've been telling people that story, frankly, because I think it's highly relevant as an anecdote for where the banks are thinking. And as you and I have said before, banks got overweighted to
Yeah.
multifamily over the last 2 years, especially because with everything else being kind of, frightening to them, right?
Mhm.
Retail,
Yeah.
hotels, especially office,
Yeah. Where
they
else to go? Right. Just
where else were they going to lend, right? So they all lent on multifamily, and now they realize that they got seriously overweighted, and with the headwinds, I don't think are strong, but there are headwinds now for multifamily as there weren't
Mhm.
before, and that's making a lot of people scared. So, but what does that lead us, right? It means that if you have money, if maybe you're going to have to go into these deals with a bit more equity than you would otherwise, right, to make the banks more comfortable.
Mhm.
Uh, you got to find good lending sources that are still happy to lend on and believe me, there'll be plenty of people out there willing to lend, but interest rates are going to be higher, right?
Mhm.
So
Yeah.
if you're prepared to deal with all that, there's going to be a lot of opportunity out there because there will be distress, but there's also going to be less competition,
All right.
because of all these factors, right? When liquidity dries up, it means that it for people who do have cash becomes king, and you can
Mhm.
buy great bargains.
Yeah.
So I do want
Yeah.
to kind of
Please.
share this. Some of you have probably seen this before,
Always a
but
great reminder.
yeah. But I'm gonna bring this. Sorry, bring this over here so you can. So can you see this, Michael?
I can. Thank you.
Yeah. Okay. So this is a great chart. I love this chart. I used to talk about this a lot a few years ago when I thought the market was topping out in 2019, which I think it did. But this is, I think aimed at Wall Street types, but it really works for any market. And it shows you kind of this kind of stuff over here, this hope, optimism, euphoria. I don't want to focus on this. What I want to focus on is the simplified market cycle here, right? If you can
Okay.
see this now,
Yep.
it has a couple of main points. There's the point of maximum risk and the point
Mhm.
of maximum opportunity. And the interesting thing about these 2 points, right,
Mhm.
is that the point of maximum risk is precisely the point where everybody thinks this is great. This is the greatest thing since sliced bread, whatever the asset they're talking about is. So whether it's tech
Yep.
stocks or whether it's multifamily, it's when everybody and their uncle has jumped into the market because they think it is safe that is actually the riskiest. And this is what I
Yeah.
was always talking about.
This is what I saw in 2019 when I was going
Yes.
to real estate meetups and everybody was a brand new syndicator. I'm like, I am getting out of this space. Little did I know we'd have a pandemic and rates would go to 3%, but
Right.
that's why I sold my apartment is this chart right here.
That was what prolonged this bull market. I mean, the bull market, everybody already had recognized by 2019 that it was really long in the tooth, right? But nothing had upset the apple cart yet, right? And then COVID came along and it had the exact opposite effect of what everybody thought was going to happen. Everybody thought COVID was going to crash the market, but instead, because of interest rates, it just set it on fire, right? But now, what goes up must come down.
Amen.
We're seeing the effect of that, but that was the reason that 2021, when everybody was so excited about multifamily, was actually a risky time to be buying, was because of this. The price had been
Absolutely.
bid up. You see this arrow here. The price has been bid up to as far as it can go, right? And then people are talking about new paradigm, can't go down. Interest
Mm.
rates will go down forever. The Fed can
Yeah.
never raise interest rates. Demand, look at the housing demand supply imbalance, blah blah blah. Every reason in the world why it can't, why it's going to go asymptotically like up, right?
Mhm.
So that's the talk that kind of signals that you're at the top of the market, right? This is when I was the most scared because I'm like going, this can't last,
Right.
and something is going to come along to upset this, and then you have the crash. Now, this is when everybody is talking about how great this asset is, like whether it's, doesn't matter what it is, tulip bulbs, crypto,
Doesn't matter.
stocks, doesn't matter, right?
All goes through it. Consumer psychology is consumer or investor psychology. Yeah. Yeah.
Yeah, right. And then you have the crash and the price comes down. Now, when the price comes down, right? What is the typical investor saying? They go, oh my God, the price is falling, right? It's a terrible investment. It's going to keep on falling forever. I better wait until this stops, right? Because it's scary, right? And what they don't realize is that this is the point right here where people are the most scared and there's the most opportunity. Now, obviously, you can never time this market precisely, precisely, right? Just as you can't time this moment precisely. But frankly, I think it's a little easier to time the peak than to time the trough, because you just know, maybe you don't know exactly the peak, but you know, like when you're kind of in this area, you're like, this is getting kind of scary to me because everybody says it's good, right?
Yes.
But so you can kind of get out near the top, even if you don't get out exactly at the top. This is a harder moment to time, but you don't need to, because look, anywhere along this period, right? If you buy, you're getting a bargain, you're getting a better bargain, you're getting an even better bargain. But even if you buy at this point, if you're cash flowing and you have fixed rate debt locked in for long term,
boom, done.
Like, so won. What? You could have made more money down here. Well, who cares, right? Because you're cash flowing, and maybe you've got a paper loss going through here, but who cares? Because the next cycle is always higher, right? At the end, right? So you're going to make that delta, right? And every point along here, you know, the other side, you're going to make that delta coming back. Plus, you're cash flowing this whole time. So the issue becomes, like, when people get in trouble is when they're buying up here and they're saying, you know what, there's no cash flow on this, but I'm going to make money when I sell.
I'm going to win anyways.
I'm going to win anyway because I'm going to get appreciation.
Blah, blah, blah. Yeah.
But they can only get the appreciation if they happen to have their cash flowing, they have a margin of safety baked in, right? Their debt is fixed, so it's not going to change on them, and they can just ride this out. But if you see what happens here, this is a lot longer a period to ride out than buying sort of somewhere down here, right? To ride it out. So this is where people get in trouble, where they're like, hey, I'm going to make money on the sale. You may not make it to the sale, because what happens when you've got to refinance right here, right?
Yeah.
Now the bank is going to tell you, hey, Mr. Investor, you owe us $5 million principal on your loan, and your asset is worth $5 million, right? So when you go to, like, you know, it was worth 7 here when you got your loan, but it's 5 now, and you go to another bank to say, hey, give us 5 million, and they say, well, we'll give you 3.5. Because your asset's worth 5, and now you've either got to come up with $1.5 million, or you're going to hand the keys back to the bank. And that's the risk, right? That's why it's risky up here. So what I want to tell people now is, like, look, we're like somewhere like up here, right?
That's exactly where I was going. Is if I look at the other chart, just because it has words, we're somewhere between, we're really close to complacency on the way to anxiety. This has just started. This was my point earlier. I think we've got 2 years of opportunity, because we have just started to see the smallest of small cracks in operators and holders, and it only gets worse from here.
And this is, you know, just like kind of hearkening back to the great financial crisis, right? Like, see this panic situation here, right? Shit, everyone's selling, I need to get out. This is when a lot of people handed the keys back to their bank. Like, they were making their debts, they could make their mortgage payments, but they're like, oh, I'm underwater, I'm walking away.
Yeah, I'm out, I'm gone.
This was, you know, unless they went in with no equity at all, and it was like a 100% financed loan, this was incredibly stupid, because all they had to do was just wait, and their house prices went way back up past what they bought them for, right? But this is where, like, a lot of people lose, because they're like, I've got to get out, right? I'm going to lose more if I don't get out. This is the time when you should be holding, right? Because you know it's coming back. But what I want to tell people is, like, look, this is when Grant Cardone says there's going to be great opportunity ahead. Like, this here, this is what he's talking about in here, right? Because you're going to be getting discounts relative to where things were for some time. And
let's be clear, he's going to get phone calls. I mean, Grant Cardone is probably on a list of 10 or 20 buyers. And he's going to get those first phone calls for the trophy properties that are in trouble. And basically, he's going to be asked, do you want to take this over? He's
Yeah.
probably not even going to have to bring money to the table. He may have to escrow some money for
Yeah.
repairs or whatever, but he's going to get those phone calls that says, hey, you want another 500 units?
Yeah, absolutely. Yeah, because who do you think the banks are going to, or the brokers are going to in that
Strongest
situation?
of the
They're,
strong. Yeah.
they're going to the people that they know have the money, right? So, and obviously, like, I'm not Grant Cardone, you're not Grant Cardone,
Nope.
probably nobody listening is Grant Cardone, but you can do this on a smaller scale, right? You can do this wherever you are, at whatever level you're at, right?
For sure.
So if you're if you're like in my world, and you're syndicating deals in the 10 to $20 million range, right? There's going to be that opportunity coming. If
For
you're
sure.
just starting out and you're going to buy your first duplex, I mean, look, you're going to be able to get your first duplex at a way better price with much more security in terms of less risk in a market when everybody is telling you that you're stupid to be buying. And
Yeah.
if you ever hear anybody tell you, oh, don't invest in real estate now, it's a bad time, you should be licking your lips, because
Yeah.
that is precisely when you're going to be getting the bargains, because it's like the flip side of like that, the shoeshine boys, giving
Yeah.
stock
Absolutely.
tips, right? That's the inverse of it. When you got to be wary is like when you're Michael Zuber and you go to a meetup and everybody's a new syndicator.
Yeah.
That's the signal that the market is reaching the peak. The opposite is when like the casual person who's never invested in real estate starts telling you, oh, it's such a terrible idea, I heard this story about this guy who lost all this money in real estate.
Yeah.
Like that's when you should be like, oh yeah, all right, like get on the phone with some brokers now. And the other
Yeah.
thing too is like, listen, I've already had this happen to me, calling up brokers who thank you for calling them, right?
Yeah.
I mean, the brokers are losing their jobs right now,
Yeah.
right? They're getting their comp cut, right? Because
Yeah.
the business is dried up. Multifamily volume is off by $100 billion over
Yeah.
the last year in volume, in transaction volume, right? So the brokers are getting a little anxious. So it's a great time to be making those connections with people, folks.
Yeah. And I want to go back to something you made, because I've lived this before. And you or I, you're absolutely right, aren't Grant Cardone, but anybody listening to this, you can become your version of Grant Cardone in your market, your buy box. For example,
Yes.
I became that, small multifamily, we're talking 5s to 20 units. I became a known buyer for distressed assets, and I had a bank president meet me at a property and said, can you take this over? And I'm like, what do you mean? Right. It's the first time it ever happened to me. He found out I was buying. He called me up. I thought it was a prank phone call. It's like, what is going on? We met at the property, happened to be one next to one I already owned. And he's like, let's do a deal. I want this off my books. He gave me it for no money out of pocket. I had to escrow like 50 grand for repairs. And it's a deal I still own today. So you can become that in your buy box, your area. I would, if you're following my one rental at a time, go small, go 5 to maybe 40 units, and it's going to be a great time. So I see a lot of opportunity ahead. I think there's a good chance, Jonathan, I do my biggest unit count deal in the next 2 years. And I look forward to that.
Yeah, I mean, listen, this is a great time to be starting out, and just like recessions in general, right? They tend to be a period of like really great creative,
Yep.
like growth, right? It's the time when people get laid off from their job and they start the next great company, right? It's the time when real estate investors can get in at the bottom if you've got some cash, right? And you can go to a bank and say, hey, look, and maybe you're talking about a $500,000, sorry, $100,000 duplex someplace in a small market, right? And you've got $50,000, right? You haven't bought anything before, but you go to the bank and say, look, I want a loan for 50% of this.
Right.
And if you've got good credit and you're going to only go 50%, they're going to be like, okay, yeah,
of course,
that's the kind of risk we're going to take right now, because
exactly.
they're very secure, right? So if you have, and then you can always listen, then in 2 or 3 years time, right, when the market is swung up and interest rates maybe are a little bit lower, even if they're not, it doesn't really matter. You can refinance, pull that money out, probably pull all of your money out at that point, and do it again. So
recycling capital is amazing. It was key to my growth.
So please, people, like, I just can't emphasize this enough. Get ready to be buying, because
Yeah.
this
Do
is
the work.
going to be the time of opportunity for you younger folks. If you're like under 35, you've never seen this before,
It's
right?
coming.
So
Yeah.
it's coming. Yeah.
Yeah. Well, Jonathan, what is your Facebook group? Because people from One Rental at a Time need to join, need to tell you they're coming from One Rental at a Time. What is it again?
Yeah, so it is the Apartment Investors Club. So please come over to Apartment Investors Club and join us for the conversation over there. It's a great group. You can ask me whatever you want. If you got questions about multifamily, please swing by. You can also join my email list at apartmentinvestorsclub.com. And there's a free download there. And I'm also having a conference in April where you can come and meet me, April 26th to 28th at the Link Hotel in Las Vegas. It's going to be a great time. And just we have a spectacular lineup of people who are going to speak at this event. So get on my email list and you'll get the link for where you can buy tickets, and really hope to see you there.
Awesome. Thank you so much.
Absolutely.